rent, how will pay back money to those suppliers. All of them, they rush towards you and they sue you. And what happened at the end? They don't have much choice. Rather, they don't have much choice. Rather, to announce bankruptcy. So you need to compare apple to apple. Even then you need to base your benchmark realistically. So what should be the benchmark? It's a separate discussion. A benchmark doesn't mean that you have to be on the same phone company. Sometimes the two companies, they are offering different products. They can be the benchmark. Okay, I am making phone and this person is making other electronic product, for example, electronic pen. This guy is also a startup company and I'm also a startup company. So I can ask him, how did you come up with this ideal pen, or how much you come with the demand and all this stuff. Then I can use those processes to understand my business environment, and I can copy their practices and then start doing. So for a startup, copying management practices of those companies who are market leaders, who already established, it's a very wrong choice for entrepreneurs or new businesses, right? So that is why they failed in their initial step of budgeting. So when budgeting is not, on proper means, then how they will say that they can control or they can evaluate, they can be on the right track? What would be their feedback? Rather, failing to the core, right? Also, the one biggest advantage of budgeting is that to uncover potential bottlenecks. You see your history and you find out that our salaries budget continuously deviating from our set budgets, and that is a big problem for us. Why is that? We are have to pay higher cost to our employees. If we say our competitors, if we see our market leaders, they are paying less salaries, why we are paying higher salaries? What is the reason? And then you cover up that because under the employee salaries, under the employee training, you are paying too much money. And then you go back to the training account and you see that, oh, it's because we are losing our employees. And whenever we hire a new employees, we have to pay commissions, plus we need to train them. And it has a huge cost on us. So it's better to hire a person, give them higher salary and make a commitment that so that he will retain so he will stay with our company for a longer period of time, right? You maybe this is the the fault, or or something, a drawback of your HR department. They are unable to convey the policies or unable to hire the related person, right? So that's why people are the employee turnover is high. So sometimes budgets can also discover the potential bottlenecks, which is very hard to find out why our orders are not on time, why we are not having targeted profits. The underlying reason is hiring not appropriate person. It's not about the fault of a technology, fault of the supervisors, fault of production supervisors. It's the fault of HR, right? So budget also have the advantage of like think about and plan for the future, rather just purchasing, converting it to the finished goods and then selling to the market. First make a budget whether it is viable product for you to sell. Sometimes demand is very high but the profit is not high, right? It costs you too much, and when you sell it the market price is lower, and then you realize that okay, demand is high, people want to buy this, but there is no profit in that. So why you should quit that product, right? So sometimes not sometimes, it is always good to budget for the production, for everything, so that you can control, right? So yes, David, you want to ask something?
No, I just agree.
Okay. Okay, now a very emerging terminology nowadays is the responsibility accounting. So the famous war between the departments, I already told you a number of times in my different subjects as well, that there is a constant war between marketing department and production department. Whenever company make profit or company, have a losses, the production department will say that this is not about because of us, it's because of the marketing department. The marketing department will say that it's not because of us, it's because of production department. And why is that? The marketing department will say that, look, we book orders and they did not fulfill the order on time, so we lose the customer. Or we book less orders, they produce more because they are greedy, they want to have achieved their target, so they want to have some bonuses. So we saw the market, we see that economy is going down and we are having a less orders, so they need to produce less goods. So because of that, we are having losses. The production department will say that our targets are not selling. Our target is to make these many goods, and we make those goods on time. It is the responsibility of the marketing department that they are not selling on time or they're unable to sell. So we produce our requirement, under our budgets. We should be given the bonuses, right? So responsibility accounting is that managers should be held responsible for those items and only those items that they are actually controlled to a significant extent. So, so the the CEO or the bonus department will say that, look, who controls the sales? Does the production department control the sales? No, right? So should the production manager be responsible for company losses because of not selling, not achieving the sales target? It is the responsibility of sales department, right? Even if even if there is a loss, if the production department is doing good, they are they should be given bonuses. Or if one employee or one manager, he is fulfilling his sales target, he's very good at that, he's not responsible for company's overall sales, he meets his own target even though the company is having a loss, he fulfill his budgets, he control the budgets and all the stuff, he should be given promotion and bonuses because he controls what is given to him. So he controls his all the significant authorities under his jurisdiction. So he's giving you profit, so he should be given bonuses. So that is, it doesn't mean that if company has a loss, everyone should be punished. It's because of everyone. No. Only those managers should be responsible who contributed significantly on company's downfall. Right? So, choosing the budget period, normally there can be budgets, different types of budgets. So, we will talk about the operational budget. The operational budgets normally cover a period of 1 year. So, there are some strategic budgets as well for 5-year budget, which shows that, okay, we will be the market leader if we sell 1 million units in year one, 1.2 million in year two, until year five we will be able to sell 5 million units. So that is a strategic budget, right, for more than 1 year. So operating budget is that we will be selling, producing this many goods and we will be earning this much profit. So operating budget is normally made up for 1 year. So we will talk about, our main focus of this chapter is more on operating budgets.
Sorry, sir. I will disconnect now and reconnect within 1 minute.
Okay, sure. So a continuous budget is 12 months budget that rolls forward 1 month as the current month or quarter is completed. So normally budgets are made like a continuous budget. For example, 1 month, 2 month, 3 month budget, and they roll over then. Okay, so normally the continuous budget is that, okay, they converted yearly budget and they divide it into a monthly budget. And if monthly target is not achieved, then your next month target has increased so that you are on the track, right? Self-imposed budgets. So self-imposed budgets are in which the uh, the lower, it's basically from bottom to up approach, in which the figures are collected on bottom. For example, if you are making sales budget, and if the top management decide, okay, we want to sell 1 million units next year, so that is a top to bottom approach, in which the employee, supervisor, middle manager, or the all, they are receiving instruction from the top. The problem with the top down approach is that the employees don't see it as a serious one, or they will always complain that the management, they don't care about our health, they don't care about us, they don't see the environment, they too much pressurize us, and sometimes because of these excessive goals we cannot meet our targets. So self-imposed budget is that, because budgeting is a top management approach. It's not made on lower level or supervisor level, it is made on the top management. So while gathering this the data, the self-imposed budgeting says that, okay, you ask your supervisor, okay, how much you will units you will make. For example, supervisor one says, okay, I can make 200,000 units. Supervisor one says, I can make 100,000. Supervisor four says, because it's a big factory, he said, look, I can make 500,000. And the third one says, I can make 300,000. So total 1 million, right? So what is the benefit of having self-imposed budget? That the employees will feel that we are being involved in decision making, plus motivation is generally higher. Why is that? Because if I say I'm going to be producing from this factory 500,000 products, then this is like my talk, my words, and people will do anything to complete their words, right? Sometimes in order to save their jobs, they make unrealistic budgets. So the supervisor four, three, he says that I will be making 500,000 units, and the management included 500,000 units, and the total budget is 1 million units. But since manager three, he wants to keep his job. He says that if I lower down the units to 400,000, they will kick me off. They will fire me. He want to save his job. Or maybe he is looking for the job and he will make unrealistic approach, and after that he get a good certification, employee records from that company, and